Oh man, we live. What's good, man? Happy Sunday. Mic check, 1 2 1 2. We back, baby. Happy Sativa Sunday. Woo, man. It's been a good 2 weeks, man. Had to take some time off, just relax, ignore all the noise, let things play out. Um, but yeah, tonight's gonna be a great show. We got a lot to catch up on. As I said, it's been 2 weeks. Been 2 weeks, you know what I'm saying? So we got a lot. I'm gonna give it a minute to let everybody get in and get caught up. You know what I'm saying? I'm gonna come show some love to those in the comments. But listen, we right at now. What's that? What we hit my 50-second mark. So now everybody should be here. If you're late, you're late. You'll just have to catch up. But with that being said, good people, welcome to Sativa Sunday, the stock market show that combines fundamental, macro, and technical data into an agile format to help you develop an edge in the marketplace. I'm your host, Zeta Wealth Strategist, and what's good? So tonight's episode is titled Bulls Unleashed April, the most bullish month of the year. Episode 61, y'all. Gonna be a good one, man. We got to do a lot of catching up, so I'm going to try to make it quick and efficient. Y'all already know, I know the NCAA tournament is going on, March Madness, all that crazy stuff. So I want to get us in and out. So with that being said, I'm going to come to the comments. I'm going to say show some love to the comments real quick. And then I'm going to show some love, and then we're going to get this thing popping. So with that being said, Michelle Tucker, what's good? She said, hey, family, glad I can make it. I'm glad you can make it. My dog King Rail is in the building. What's good, King Rail? How you doing, my guy? My boy Dre, he say happy Sativa Sunday. We back. Yes, for anyone, great episode. Please hit that like button as well as subscribe. Let's go. My guy Darius in the building. What does the data say? I'm here for that data-driven commentary. You know, that's what we about. Oh my, hey Darius, the data about to go crazy because we got some catching up, man. My guy All Grind Mark, what's good, man? How you doing, brother? My boy, I think it's you slow to music. I think that's how if I'm saying it right. If I mess it up, sorry, big dog. Bro, what is good though? But I appreciate you for tapping in, my dog. KC with the wave was good. J157, how you doing, good brother? I appreciate you. Eric, what's good? What it is, man? Appreciate you. Doe, what's good? Done deal, what's good, man? We be chopping it up on Twitter and say, he said, where the Bears? I don't know, but we gonna talk about it. And then what's that? Lando Plenty 21. What's good, family? Appreciate you for tapping in. And then I just seen my dog show up. Quadri Runners was good. And then Ron, your Duke Nation. Is Duke still in the tournament? Did they get put out yet? I don't think. Actually, no. They're playing James Madison. That's right. They're playing James Madison. So we'll see if James Madison can keep pulling off, all of that, good stuff. So if you already haven't, go ahead and make sure you hit that like, share, and subscribe button. And so listen, man, without further ado, I'm gonna get right into it tonight because, like I said, it's been 2 weeks. So got a lot of information to share. Got a lot of things to catch up on. So I'm trying to get my screen right real quick. And it looks like, what's good, Kev? How you doing, man? And then Ron said, no, 93.55 blowout. And then he said, you solo H2O. Oh, okay. And Endo is endoing. That's what it is. And Clive, what it is, Clive, appreciate you, is you solo H2O. Got you, my man. All right, y'all, without further ado, let's get into the show, man. So first of all, man, it's been 2 weeks. And so the last episode that I did was, go look at my notes. The bull market is about to broaden out, right? And I mentioned that the small caps was about to break out. We'll talk about that because clearly it had a pullback. But I still believe in IW, and I still think we're gonna have a good year. But we'll get to that later. But the point being was where I left off. So 2 weeks. If you go watch the last episode I left off, the main feeling, or the way I was, or the main thing I said, which my stance was, I said, listen, I've been repeating it. I'm bullish but hedged. I did say that as long as we, got through this window of opportunity, that ultimately I could see us going for a 10 to 12% first quarter, right? And setting up for a big April. I also talked about and shared some data how that at that point in time, 2 weeks ago, I upped my end of the year target to 5,700. Right. And so now that we have gotten through these past 2-3 weeks, because when I think about it, the last episode that I had left off, we were going into, I believe it was NFP week, right? So I just laid my notes, NFP week, right? And so I'm going to start most recent and work my way backwards as we do this catch up, right? Because, this is about to be the last week. And so people are wondering, well, damn, how is the market still running, right? And so, of course, we're going to break down all of the data that we've gotten recently and just everything that was going on. So with that being said, I'm going to go ahead and pull up the information in the board real quick. So let me share my screen. Entire screen over here. All right, so let's get into it, good people. Let's get into this little recap. So before we get to the performance, like I said, the last thing we had, or the last episode that I did, was March 3rd, right? And so if I go back, coming into this week, it was about the labor market. So I'm gonna make this real quick and efficient. Well, actually, no, I'm supposed to start from most recent, so my bad. Let's start with this past week, right? And I'll work back to the labor market and all that, because really all of that was a lead up to the FOMC, right? And that's really the biggest thing that most people kind of need clarity on, or if you already haven't gotten the clarity, we're going to talk about. So let's just break down this FOMC, right? Now, the runners know, right? And the family know that the risk going into this FOMC was two things, right? It was, number one, we needed to see, was the dot plot going to change, right? Was the dot plot going to be changed? Meaning, in the January meeting or December meeting, it was slated that we were going to do 3 rate cuts in 2024, right? And so the fear, right? The fear was that the recent hot inflation readings would cause the Fed to budge, right? Maybe they would do less rate cuts, right? Or maybe they would make the terminal rate higher, right? The whole fear that was going into this FOMC or centered around was, what are they going to do about these recent hot inflation readings, and did that impact them doing rate cuts? And what we got was a big shocker, right? And I'm going to say a big shocker, even though I was bullish and I figured, hey, I ain't gonna front. I was definitely on the side of caution, where I was like, man, maybe these hot reports might make them buckle, right? But to my surprise, and to a lot of people's surprise, the Fed did not change the dot plots, and they pretty much left rate cuts on the table for June. And so when we got that clarity, when we get to the charts, you'll see the market just took off, right? I mean, we took off. Not only did we get that shocker as far as the dot plot not changing, the Fed, or Powell, came out and explicitly stated that the January and February inflation readings did not change the story, i.e., it don't change the narrative, i.e., that means inflation continues to moderate and it's coming down, and basically, they're not going to, it didn't cause them to panic. You know what I'm saying? He also talked about how that the Fed considered some seasonal effects in those 2 readings, right? So even though they came in hot, they say, hey, it could be some seasonal effects. The reason I'm going through that information is because those naysayers and fearmongers, every red folder we get will come in and say, oh, well, if the inflation is going to be hot, the market's going to tank. Well, every time we've been, even if it has came out hotter, the market continue to run. And, the naysayers don't understand why. Well, It's because seasonal effects we're looking through, and the Fed narrative is still the same, right? And if you watch this show, you know that I already laid out that the Fed said, listen, we just need the inflation to stay the same. It don't need to get better, don't need to get worse. And if that's the case, we feel comfortable. We just need to get a few more data points and possibly we'll start cutting. Powell already said we don't need inflation to get down to 2% to start rate cuts. So when you're listening to these people on TV or Twitter or whoever, please make sure they know what the hell they talking about. All right. Or at least they getting accurate data. Right. So that was two things. That right there kind of just set the tone. Once Powell addressed those inflation readings and the dot plot ain't changed, shout out to my boy Ron. It said bears go into hibernation. It was over. Bearish thesis dead, right? Over. Them hot, it's what more can I say? Bears dead. Been dead, right? They've been dead. So it just furthermore confirmation, right? And last but not least, right, working my way backwards. So, as I look at this macro calendar, we had the FOMC, right? The week before that was inflation data. So again, I'm not going to spend that much time on inflation week and coalition week because it was mitigated. Yeah, the report came out hotter than expected, but hey, it don't matter, right? So then you go and you look at the week before that, which was the labor market. And that's the last point that I want to make as we are, kind of catching up, which is that in the FOMC, he said that the labor market is coming into more balance and it's not much of a Fed concern right now. And so once again, almost verbatim, right? Shout out to my dog, Ron, almost verbatim, Powell's damn near had the same speech from January and March. And so this FOMC was a win for the Bulls. And overall, he stated again, the economy is strong. Inflation continues to moderate and the labor market is coming into more balance. And I'm going to go back to one of my old episodes. Why so bearish? This market is just like, it's why so bearish, right? So, listen, man, with that being said, now I'm gonna pull up the charts, right? So getting through inflation, the labor market, all of that good stuff, quad witching, right? We got through it all. And I believe in the last episode that I left off, I said, listen, if we get through these next 2-3 weeks and we stay above 5,100, my target was, I think we go for a 10% quarter, which put us at 5,200, 5,250. Well, with that being said, right, you can see from a market perspective, the SPX, last week was up 2.29%. If we look at it from a monthly, we are now up 2.71%. Right. And again, I'm going to keep resorting to my last episode because I'm glad I took the 2 weeks off because all we did was go sideways and it was a bunch of noise. But at the end of the day, I showed the data that says when you have a bullish February and March, if I can go find it, where is it at? So here's some of it, right? When you no, this ain't the one I want to show though. I gotta show. Where's the one I do want to show? Where is it at? Because that's the one that's so relevant. I gotta find it. I think it's gonna be under technical indicators, maybe. Yes, it's gonna be under technical indicators. That's right. That's where I think I'll put it. Yeah, here we go. Boom. This the one, right? If you watched last episode, right? My last episode, we went through this data. Which says that when you have a bullish January, February, the typical return for March is 2.2%. Boy, I laid this out in my last episode, which was 2 weeks ago, that's where we, if we get to 2%, where was we going? We are here now. So I'm not going to do a bunch of like gloating or whatever, because it leads me to this. Many market participants are shocked and wondering, what do I do now? The market is up damn near 10% on the year. Remember, in the beginning of the year, the average that we was going for was 12 to 13%. So we damn near at the end of the year target, right? And so we got Powell out the way. And when you observe the landscape right now, this is where I'm going to transition into this upcoming week and the main topic of today, which is bulls are about to be unleashed. And we're going into April, the most bullish month of the year. So like I was saying, Powell is out of the way, right? And when you look at the landscape for April, right, we have earnings season, which is going to kick off in about 2 weeks. So I'm going to go ahead and address earnings right now. There's no, we're in a little earnings bubble right now. Earnings season 1 has pretty much, or quarter 4 earnings season has pretty much wrapped up. We're about to transition into quarter 1, which starts about 2 weeks, mid-April, and we start with the banks, right? We also do not have a FOMC meeting in April, right? If we think about, what other potential events or catalysts we could have, we're going to get our labor market data and inflation data. But the thing about that is, because of the FOMC, Powell has kind of mitigated that. So listen, if that data, so this is another takeaway from the FOMC. If April's inflation data, we see a drop, and it shows that January and February was just a blip, and it was those seasonal effects that Powell talked about, then man, we gonna be gunning. April already the most bullish month, but this is just some fuel to the fire, right? And I just don't see much that can get in the way of the bulls, right? If you're a bear, you could please give me a macro argument, or give me a fundamental argument, or give me a technical argument, because I can counter all of them. Right? I can counter all of them bad boys. So, as I look at this landscape, man, it's about to be crazy. But before we even get into April, let's just talk a little bit about this upcoming week, right? So we look at this upcoming week, and we're talking about how we're going to end the month of March. I got some good news. I got some good news for us coming into this week. So number one, right, as we look at this upcoming week, the main macro factor or main catalyst, right, I'd say it's going to be 2 things, right? The first is definitely Friday's core PCE inflation data, as well as we have Chair Powell who speaks, right? And I believe he's speaking at, it looks like some type of discussion on macroeconomics and monetary policy in San Francisco. Audience questions are expected, right? Now, we have both of these 2, things going on Friday, but let me point out, it's Good Friday. The market is closed. So we won't even get to see the market's reaction to this information until, guess what? April. You gotta love how they be setting this stuff up, man. It's crazy, right? So with that being said, working our way backwards, the other information that we have this upcoming week is going to be the final GDP, which we expect to be strong, not an issue, right? We're going to get revised consumer sentiment, some pending home sales. We also got some Fed speaker talk, and then we get durable goods. I'm just going to keep it funky, y'all. A lot of this stuff on this calendar right now is probably irrelevant. I'm not going to, well, let me not use that word, right? Let me not say irrelevant. I'm just going to say it's low impact, right? It's low impact, because based on what the Fed said, what we've talked about, or I've talked about on this multiple times, is what's driving the market. Fundamentals. Macro ain't really been doing it. If anything, macro has been giving you entries, right? If we have red folders or whatever, that's when we've been dipping, but it's been getting bought up. So what's been moving this market has been fundamental. So when I look at this week, this is the final, this the last trading week of March. That means you got funds that are doing monthly closeout, quarterly closeout. So don't even get me talking about the window dressing that we might see this week. As funds look to close out the quarter, if a fund ain't been doing good this quarter, they gotta pick up winners and add the winners to try to make it look good. That's another catalyst for this week actually being positive, is that we could see funds have to do window dressing, meaning they gotta buy shit, right? Seasonal weakness is over. We made it through the seasonal weakness period. The correction we had was a time correction. Once again, go back and watch one of my earliest episodes when we talked about 2024 and laid out what it might look like. One of the things that I mentioned was we might only have time corrections all year, meaning we make a move up, we go sideways. We make a move up, we go sideways. I'll go back to the data, right? And we talked about that because that was, if we go look at presidential elections and what does that year look like, right? That's this. You make a move up, basically this area sideways, you make a move up. Go sideways, you make a move up. Go sideways, you make a move up, right? And so now this is where we at. We are coming out of March, about to go into April and May. And look at that rally. It's gonna get good, y'all. It's gonna get good, man. It's gonna get good. So yeah, just oh crap, had to share that information. Let me zoom in a little bit so y'all can go see that. So where was I at, man? Last week of trading, quarterly closeout, right? So funds got to close. They got to do some positioning, right? So that's another factor that we had this week. Light calendar, final positioning for the year, and once again, going back to what I said, as we go into this final week, it's really a light week, right? You got funds that's going to be looking to close out short week, so it's really not too much to kind of really talk about, except get ready. If you ain't in position, this might be the week where you're gonna see people getting in position for what's to be, maybe a bullish April. And so really, like, it's a light week, so with that being said, let's go ahead and transition into the indicators a little bit, right? We're gonna talk about it, do some catching up there, and get into this board a little bit, right? So where are we at? Here we go. Let's talk about it. All right. So a couple things, right? Let's talk about the investor sentiment, guys. Y'all know. And we're going to start with the fear and greed, right? So just some things to be mindful of as we end March, as we get ready to go into April, right? And once again, multiple times we talked about it, right? Greed is only at 72. So this certainly can get back to extreme greed. If we look at the timeline, we have been trending sideways and we can stay sideways, right? We are in a greedy market condition, right? And so we can stay here. So, this is not something to necessarily be fearful of, right? Why do you need to be fearful when, the market is just being driven by greed, and we're going into the most bullish month of all, right? And we're not at extremes yet, meaning that, from a fear and greed perspective, we can go higher, right? And so just be mindful of that. And as you can see, look at that. We have been running. And so, you do have that aspect in the market. Next, let's look at our survey sentiment, or sentiment survey from the American Association of Individual Investors. Again, right? So here was the cool thing. I think the last time we had talked was right here. And as we get ready to go into FOMC meetings, we typically see the neutral will typically rise, right? Shout out to Yusuf for that. And so it did. And then we went up bullish. And so essentially over the whole month of March, I'm just going to, again, speed up, catch it up. We're still very bullish. And over, say, the 2 weeks when we went sideways and we had our time correction, bullish came down as it should have, right? So bullish hit a peak. We cooled down. It went from 51 to 45 to 43. We actually even had an uptick in bearishness going into the FOMC meeting, right? So please be mindful that we got an uptick of bearishness going into the FOMC. Guess what happened? FOMC came out super dovish, and this little 27% of bears got smoked. Right? Absolutely smoked. So what does that mean? I would say that when we get the update on Wednesday, bearishness is probably going to go back down, right? Back to them 21s, neutral, and might come down, and bullishness is probably going to go back up. Now, once again, note, we are about to go into the most bullish month of all. So therefore, I don't think I can go back that far to get the data, but just know that this bullish number can keep running bullish in April. Okay, right? And so from a sentiment perspective, we're bullish. Don't know what to say. uh, and so that's that, right? If we go and take a look at the energy and commodity resurgence as far as just risk, um, that's not really a risk right now. So let me see. Do I need to pull up? No, there's a couple things I did want to take a look at before we get to the charts, which is money on the sidelines. So one other last update would be from our National Association of Active Investment Managers, right? So we like to take a look at this as far as money on the sidelines. Another good indicator. Please note that the active investment managers, they all in. They all in. And this is another thing that we talked about as far as when we're in a bullish environment, we have to interpret indicators a little bit differently. So while we have been getting dips from, this perspective, bruh, the market has continued to run up. So they've been buying them dips. When exposure dropped to 53, look, they ran that thing right back on the 95. When it came back down to say 74, they ran it right back up to 100, and we just dipped going into the FOMC. So guess what? Probably next week that thing gonna probably shoot back up and go a little bit higher, right? Now I will say from an active investment manager fund, they starting to get they all in. So I don't know how much higher this can go. I mean, it shows us 120. I ain't never seen it that high, but it don't mean that we can't get that high. But I will be looking for another bounce back as the market continues to go higher. And again, this is just something that's going to stay. They're gonna stay exposed to the market. There's no reason not to. We running. So that's a quick little update as far as just money on the sidelines. Just note that while these people may come on TV and talk about you should sell or do this and that, their actions may not be aligning with their words is per se, right? Let's see. I think that's gonna get us into the charts now. Yeah, we went through the fee and greed sentiment. All right, so let's go take a look at the charts now, right? As far as our usual risk factors go, oil, right? We're gonna start with oil. The thesis on oil is seasonality runs essentially, right? January through April. It has been on a nice little 3-month winning streak, but it's been relatively weak, right? It's been lagging, and it's a good and bad thing, right? Because we don't want oil to run up too high because then that impacts the inflation narrative, right? And if you've noticed lately in the inflation numbers, the reason is higher has been due to raising energy costs. It hasn't been due to the service, the sticky service inflation stuff like we've been talking about. So oil has been making a little bit of run, right? We got up to 80. I think I even showed some data a while back that, where was it at? Oh, I didn't post it in here. Essentially, JP Morgan had a call for 80 by May. I'll have to go find that article and post that. But we here, right? We know that we have some recent supply issues from OPEC and stuff like that. So essentially, I'm saying all that to say that from an oil perspective, I do think oil itself can be capped. And what I mean by that is that oil may get its run up to say, 85, 90. But when we get to 85, 90, I don't know if oil can go any much higher without being an issue, right? That's my whole point is if oil kind of go higher back to 95, 100, that could be an issue. That could be a serious issue. So while for energy's sake, we like oil going up, I'd say from other sectors perspective, we kind of wanted to stay in this range, right? Because if oil can stay in this range, energy companies can still and that means like XLE and all that, they can still do good because energy companies are profitable with oil at 69. It's just that when oil goes higher, they make even more money, right? And so that's why you could have energy companies work with oil still going down, right? Like that correlation of oil to energy companies, it ain't all the way 1-to-1. So just note that we can have oil do what it's doing, right? This slow step up, right? That right here. And XLE and them can continue to work. And the reason I say that is because even though oil, right, ain't nowhere near highs and nothing like that, let me just give you one example. Whoo! Look at VLO. VLO is at all-time highs, right? All-time highs. So this is a prime example of energy companies still able to do well without oil having to do well, right? And so y'all know oil is one of our indicators just as far as the health of the global economy and stuff like that. But that, you know, it has a little bit of bearing on energy companies. But point being is, long as oil stay calm and don't do too much, we all right. The next indicator that we've been talking about for a while is the dollar, right? So if we look at the dollar, I'll say this. The last 2 days when we had rallied, right, with Powell, the dollar also rallied, right? And that's a divergence. But I've been stopped talking about divergences when I did the episode when data diverges, right? We talked about when data diverges. It is what it is, right? No point to keep pointing it out. What I will say is this, is that from a weekly perspective, it had a good week. And when I look at the dollar, here is my take, is this the spike, right? Because if we've been riding, we knew we was going to get a spike about mid-March. And from that period, the dollar would continue to sink and it would not even be an issue the rest of the year. Remember, I said I don't believe the dollar is going to be what it was last year. And it hasn't, because the market has continued to rally even though the dollar has rallied. Now, again, the reason I'm saying this is because I watched some YouTubers this weekend and they've pointed to, oh, the strength in the dollar is about to break out. That's going to make the market crash. I love this, bro. I love all these naysayers, bro. And I got something to address about that in a second, but we'll get to that. So point being, the DXY is somewhat, right, something noteworthy, right? However, you know, when I go look at it from a monthly perspective, guys, like I said, we're into that last week. You know, it didn't make a new monthly high. So this could just be a fake out and the dollar is set to come back down, or it's just going to trade in this range. And if the dollar just trades in this range, absolutely fine. Not a major risk factor. We good. Again, moving on. Moving on to the VIX, right? So I am not about to spend another time on the VIX either. But what I will say is that the VIX is under 13. So once again, it continues to be a swing traders market. While yes, you will have your day trading and scalping opportunities, for the most part, you know, there's no volatility. The volatility is really low. There's not a lot of fear in the market, i.e. fear and greed index, right? You know, it's low. I do want to point out one thing right here. And I want to bring this up because this is one of the funny things where I look at this and I just say, okay, market's probably going to keep running, which is the PCC. Right now, before I get into all our other indicators, this is the put to call ratio, right? Put to call ratio. And this is pretty goddamn high, meaning there's a lot of puts in the system. You know, I use this as indicator sometimes to be like, oh, I need to get out of my puts. And usually a good time to sell puts is when it's this high, right? A good time to buy puts is when it's this low, when it's down here. So damn, a lot of people got puts. And I don't get it. The price just keeps going up. So I don't know. Maybe we see this just, you know, people finally start to cash out or cover those puts and the PCC comes down, and then maybe that would cause a pullback or something. Or maybe, I don't know, these puts just going to keep getting squeezed. You know what I mean? We'll have to see. But I just wanted to point that out, how I find it ironic that the fear and greed is at 13. That's also an indication of like people buying protection. And yet the PCC is super high. I don't get it. We're going to have to see. But I did want to just point that out, right? I did just want to have to bring that together, because again, I'll be bringing those two pieces together, and it'd be telling me a story, yo. It'd be telling me a story that most people, I just don't. Keep going, Zay. Let's get into the yields and TLT, right? Because that's probably one of the other final things. And then I'm gonna get to the, I'll get to y'all comments. I see all the comments coming in. I usually get to those towards the end of the show. So if you do have comments or questions, definitely keep dropping them. But let's get into TLT, right? And so my last update on TLT was that I believed that we were building a left shoulder, a head, and a right shoulder, and that as long as TLT can get back above 95 and stay supported, it wasn't going to complete that right shoulder until we got past FOMC. Now, here's what I do got to say. I would have loved to see this be over 95, meaning I do want to see bonds pick it up this week. Like, I really do want to see, if we go change this to candles, that's a pretty nice little recovery, right? And it's holding this 20-day. But I got to be honest, looking at this monthly, you got two inside candles from a monthly perspective. I really want to see March end above 95. If we can end above 95, I really, really like this inverse head and shoulders that I see on TLT. Meaning this is my left shoulder, this is my head, this is my right shoulder. And then, going into April, May, and June, if we're going to get those rate cuts, I definitely could see TLT making a push up to, 105 back to 106, right? That would be my play for TLT. Now, I'm not playing TLT. What I'm saying is this would, though, be a positive for the market. If the bond market can get back to recovering and going higher or getting back to 100, y'all, wait till I get to my April target. Yeah, it's going to be really possible. Okay. So that's the bond market. It made it through FOMC and all of that stuff, and it didn't, and it held, which was, the previous, time we made a low back in November 22. All we really want to see from bonds market is it to go up. And then what would that mean? It would mean that TBT and the yields would come back down. That's our 10-year, 2-year, right? All of those, where that. So the 2-year, right? We want to see that kind of come down. We want to see the 5-year. The 10-year is the main thing, right? So the 10-year is at 4.2. If the 10-year can get back down, say back to 4 or back under these 3s, man, that's what's going to be the accelerant for IWM. And I'm going to get into the small caps and touch back on it. But I'm going to just say, if them yields come down, man, just know that's going to be when IWM going to really put in some work. That's what kind of been holding IWM back, the yields and the dollar. We really need to see weakness in those two areas to kind of give IWM that extra, right? We talked about volatility already, and I'm going to get into momentum. So, I like to look at moving averages, how many stocks are above the moving average. And remember, I said it, this is one of the things where when we're in a bullish environment, these pullbacks, this reset, it happened. We had a time correction, and the amount of stocks, it all reset. So, going all the way through January and February, this was kind of correcting. And so now here we are, set to go into the most bullish month of the year, and we have 71% of the S&P. So 71% of stocks are above their 20-day moving average in the S&P. If you go to the 50-day, we got 75% of stocks in the S&P 500 are above their 50-day moving average. If you go above, and this is what's so key, is that through our seasonal weakness, the 200 got stronger. I really need to emphasize that. Y'all need to understand the 200-day, meaning the amount of stocks above their 200-day moving average, got stronger. Yeah, you might have had a little pullback on the smaller time frames, but that's why I'm a big picture guy. And what that means, averages are moving up, meaning prices are going higher. So through the correction, the 200-day, we are now have 78% of stocks in the S&P 500 are above their 200-day moving average. And like I mentioned, guys, we can go higher. We can go higher. We can get to 91% of stocks being above their 200-day moving average. You go look at the total market, and this is where breadth has been expanding, and this is where the pullback has really occurred, because we hit our peak early. We came all the way down here in January to 35% of stocks, right? 35% of the total market was above their 20-day. And now here we are going into, once again, the most bullish month of the year, where we have 56% of stocks are above their 20-day. This includes NASDAQ, Russell, all of that, right? It's not just S&P 500. 56% are above the 50. And then once again, I gotta tell you, the 200 stayed strong. We are at 61% of stocks are still above their 200-day moving average. So you telling me we just went through what was supposed to be, the worst month of the year, being February, seasonally weak period, and yet we still are seeing strength from a momentum perspective. Gotta love it. You gotta love it. The data don't lie. I'm just sharing the data. This is facts. This is the numbers. There's no debating, right? There's no debating this. So, and that's that. Now, the last thing I'm going to go into before we get into the sauce indicators is the skew. Now, every now and then I'll bring the skew up. If you don't know what the skew is, that's the black swan indicator. And again, I've said it time and time again, when the skew is high, that makes it hard for the market to pull back or crash, because the skew black swan indicator is telling you it's a lot of puts in the system. Data over emotions, man. We trying to get that though. So, skew is high, man. And once again, we going into the most bullish month of the year. It's crazy, dog. It is what it is. Last but not least, the BPSPX, right? So that is our bullish percent index, right? So if you look at this, remember, we called this low, got to move up. I did the episode about data diversion where this had been pulling back, but yet the market continued to go up. And remember how I said we need to challenge our mindset and thinking is, if this is going to pull back, but yet the market is going to keep going up, then when this bad boy turn, oh man, good googly moogly, it's on and popping. Because now people are about to be going more bullish. So with that being said, the BPSPX had a little pullback or a little correction. And now once again, going into the most bullish month of all, we have a little bit more room to go up, right? Have a little bit more room to go up. And this is just from a candlestick perspective. Y'all know I'd love to use Heikin-Ashi. And so look at that. From a Heikin-Ashi trend perspective, we were having, so we had a correction or pullback. It happened under the hood. Trust me, AMD went from 250 to 178. That's a correction. Zscaler went from 250 to 197. That's a correction. It just so happens that the indexes, the way I'm just going to say this, market makers, they were masterful with how they held the indexes together, but yet corrected different areas at different times. Because Google ended their correction a week before quad witching. I'm gonna show y'all this stuff on the chart so you can make it make sense. But I'm just telling y'all that bulls unleashed. Bulls unleashed. That's the reason I made the episode what it was. Going to the NASDAQ, right? This the NASDAQ McCullough Summation Index. Now, once again, this has pulled back during the worst time. March is when you usually get your little pullbacks or whatever, but yet the NASDAQ ain't pulled back. Or once again, let me not say the NASDAQ ain't pulled back. We just had corrections under the hood. So there was some pullbacks, but from an index perspective, they did a masterful job of doing things under the hood and hiding it, right? And so it is what it is. So when you look at the NASDAQ, it's pulled back. But once again, if this bad boy turns and it starts to go up, that means the NASDAQ is going to go back up. There's going to be more stocks in the NASDAQ going up versus down. That's what this data means. So, I'm just putting them information out there. And yeah, that is pretty much the sauce indicators, right? That's a lot of good data, right? That's all the data that I kind of use to help put, well, not all of it. I use some more. And so yeah, so I'm, we're at 45 minutes. I'm gonna, kind of wrap it up and talk about technicals a little bit, and then I'll go to the questions. So before I get into the technicals and all that, let me just show you what I mean by corrections under the hood. And so shout out to my guy, Jason. He said, yo, as you taught me, corrections can happen at different times. Absolutely, right? And shout out to my dog, Jason. All from 2022-ish on, we've been having this thing called rolling corrections. That's exactly what just happened over these past 2 weeks is we had a time correction / rolling correction, right? Different areas was just correcting at different times, right? So let me go show you Zscaler. Look at this weekly. This is a weekly chart. In February, we made our high. Now remember, the seasonally weak period is February through March, especially for tech. Zscaler is a tech company. Well, how about this? It made a peak in February and it made it low here in March. So over the past 42 days, Zscaler has corrected by 26%. That is a correction, people, right? You go look at, and again, like, don't get lost in the sauce. We are now coming to a point where we're at the end of that seasonally weak period. And what are you getting? You got a reverse hammer and you got an indecision doji after 3 straight weeks of downside. I'm just going to put it out there. This a freebie. Zscaler looking real good. That's all I'm going to say. Just do your own research. You pick whatever strike time you want, you know, all that good stuff. But damn, that's one of my favorites. Then you got AMD, right? Let's go look at the chips. Again, this is the beginning of March. It made a high weekly. And within 14 days, 21 days, AMD corrected 23%. That's a pullback, bro. And it pulled back to an area of consolidation. Let's go look at Google. I talked about Google and showed you how, listen, Google started their correction in January, right? They made their peak, and then from January on, it proceeded to pull back. Over the 35 days, it pulled back 15%. When you go look at Google's cycle, that is about the average of what Google give you when they pull back. And guess what? That mother sucker buck bounced right off and is already about to get its correction back and more. Oh, let me give you one last one, because this another one got daggone that look really goddamn good. Apple is about to be done correcting. I know it got that lawsuit last week of the DOJ and all of that, but look at the timing of that. You getting the worst absolute news on Apple during the most optimal time to buy. If you look at it, and we can start either from December, but I'll start here. I'll start at January. January is this candle, right? We made our peak. And if you go to this low, over 42 days, Apple pulled back 14.2%. And I'm going to just give y'all another little dope ass freebie, because I just feel like this one was just, it's too good not to share. Runners might be mad at me, but damn, this make a good point. If you look at this correction, 84 days, right? 15.79%. If I go look at this correction, this the peak, and I go here, how about that? 84 days, 15.59%. This one here, hopefully y'all can, I'm gonna zoom in some more. Hopefully y'all can see that, because I know it's real small on the screen, right? 84 days, 15.79, 84 days, 15.59. And then just look at that, right? Look at the symmetry. Look at the symmetry, right? And so when you look at that, bruh, Apple is in correction territory, bruh. This one you supposed to be buying. I'm just saying. And again, one last thing before I get into the technicals. I guess I'll give y'all 2 freebies tonight. So Zscaler, and not to mention, from a monthly, Apple has now had 3 consecutive down months. Do you really believe we're going to go into April, the most bullish month of the year, and April and Apple going to have another down month? I'll take that bet. I'll just let y'all know right now, I'm in some Apple 200s. I'm in some 190s for June and May. Because I'll take that bet. I'll take that bet all day. So, yeah, just a correction happened. A pullback happened. You just have to like dig deep and find it and see. But it happened, right? And now the bulls about to be unleashed. They already been unleashed, but they about to be unleashed. Please believe that. So getting into the technicals and kind of wrapping it up here. Let me go pull up the SPX. But I did just want to make my point of showing y'all how Certain things have already corrected. They're coming out of correction, and it is what it is. So with that being said, here we are, right? So when we think about some of the risks to the rally, we always know it's going to be, the technicals and the gaps. But, we could talk about the yields. Yeah. We could talk about the dollar. That's one to watch. Oil, VIX, dead, right? So if whatever is going to come out of complacency or just left field. We ain't gonna see it coming. But that's cool, whatever. Until then, Bulls unleash, right? So if we were to pull back, and let me put this on a weekly so we can kind of see this a little bit better. Right, let me zoom in. The levels that I have here is from 52.34, right? If we come down 1%, that put us at about 51.81, right? So roughly right here at this March 4th candle high, right? So if I just mark that out, a 1% pullback to about right here is, it's acceptable. And I even do this one. 150, that's 51.79. What did I say? 1% would be 51.81. Listen, 1% pullback's been getting ate up, meaning bought up in a good way. And so, if we pull back early this week or have any downside, we probably, don't trip unless, don't trip if we come down here, we're going to be all right. It's only until we get a little bit further, then you might want to be like, right? If you get a 2%, that's 51.29, which basically brings you into this gap. All right. 2% will bring you into this gap. And then 3%, we're going to go a little bit further. That would just basically take out this candle and this candle. Okay. Right. So, and the bears are going to have to do a lot of work. They're going to need a lot of momentum. They're going to need a lot of help to make that happen. So even though I'm telling you these numbers, I'm sorry, I'm not the fear mongering type. I'm the optimist. That was one of the things I was going to say. I've been looking, even though I didn't make no videos over 2 weeks, I was still watching YouTubers and shit like that. But, bro, everybody was just so bearish and negative and pessimistic. I mean, even still, like, I've seen a few videos. They're like, yo, we about to crash. I'm like, bro, do these people not realize April is the most bullish month? We in an election year. Negativity. What did they say? I asked a question earlier. I said, why is fear, pessimism, and negativity so much easier to sell? And somebody gave me the best answer, because it's the strongest human emotion and it's the easiest to manipulate. And so when you think about manipulation in this market, it's always due to fear mongering, FUD, uncertainty, that type of stuff. And I was like, damn, that is a really good effing point. And it's like, where's the good news? Where's the optimism, right? Honestly, those people are often overlooked. They don't get a lot of like cheers or things like that, because I guess I don't know. It's too easy I really don't know. I don't know. And it's really not for me to know. I just want to continue to do my thing and put out positivity, optimism, and things like that, because that's just my mindset and perspective I have, right? Even if I don't get the same amount of views as people who say, oh, the market is crashing. They say that shit every single week. They get thousands of views and they be wrong. I'm not to toot my horn, but if you go back all the way till about goddamn August, man, episode after episode after episode, I've been giving and dropping nothing but heat. And again, not to toot my own horn, but my analysis ain't been wrong too much. I might have got something here or there wrong, but for the most part, bruh, my analysis been spot the F on. And I don't get it. But it is what it is. It is what it is. So moving on, right? To end the episode and get into the questions and comments. Listen, we are at a point where I said we would go for 10% the last time I was on here, but after reviewing data, we might have a 11, 12, 13% first quarter. So what that means is this week, we're going to have a positive week, right? Or we could have a positive week. And so my point is, if we get to 12 or 13% for the quarter, that's going to put us at 53.41 to 53.88 by Thursday. You feel me? right? And some would say, well, Zay, how do you come up with that? Well, let me just show y'all something real quick to really put this into perspective, okay? The fourth quarter, we had an 11% quarter. I shared data with you guys early this year, a couple of pieces of data, right? The presidential cycle narrative. Remember, I gave y'all the interview and everything, but December 16th, I put in a note. What happens during the presidential year? We get gains in the first half of the year, January through June, right? And then around June primaries, we get some weakness, right? So that's number one, right? That we had the data that, right? We know that we're supposed to get a first quarter here from based on the trends, right? Then not only that, right? Not only that, let me just reiterate that April ends the best 6-month period. Okay, right? November, December, January, February, March, April. That is the best 6-month period in the market. That is when you get the best gains. Once again, we've been talking about that data for a long time, and we already knew, which is why I was so goddamn bullish back in October and November and was trying to get people bullish back then. Because that's the cycle. The best 6 months, November through April. What's the worst? May through October. I'm just saying, the data don't lie. So you got April that's about to put the end to the best 6 months, right? And so, like I said, if we get to this 12 or 13%, that's 53.41 to 53.88. The main case I want to make, or no, it was one more data that I wanted to show. Where is it at? Is it under the January effect? No. Technical indicators. I think it's under this one. Yes. All right, here we go. This is the one that so the ZBT, right? Y'all remember we've been talking about the ZBT. That was the Zigweb breast thrust indicator that fired back in November. I talked about that back in November, gave all the information and data back then. My point is, after 126 days, right, the average is 13%. And that is why I believe we can get the 13% in the first quarter, because 126 days would wrap up our first quarter. Not only that, when you go look at the 3 months, this quarter was 11.24. We at 9.74 right now, right? Let me zoom a little bit. If you look up here, you can see 9.74. If I go all the way back to the October 22 low, you will see that quarter after quarter after quarter, we get better. So this quarter, that was 7%. This quarter, 7%. This quarter, 8%. Pullback. That quarter, 11%. This one is probably going to be 11 or 12%. Yo, this week could be crazy. It could be nuts. I'm just saying. It could be nuts, bro. Because again, people know we about to go to the most bullish month. So if you ain't buy yet in window dressing, oh my God. Yo, y'all don't understand. Sometimes when I be doing my show, I really be putting the story together as I'm doing the show. And sometimes shit just be clicking. And I be like, damn, I ain't even thank y'all. Because this is helpful for me. So the point I was going to make was this, is that, yes, we can have a great week, but and this is what I'm going to leave us with, is that ultimately how I see this playing out is I believe because of the first half gains, right? The first half run up, April being bullish, we exceeding a lot of expectations. I'm at a point where I feel like, and shout out to Marcus Cuzzo. I don't know if he's watching the show, but he tweeted this earlier, and I got to give him much respect on it because he actually called this too. But I believe that by the end of April, we could be looking at the market being up 15% for the year. And if we get to 15% on the year, that will put the market at 54.84 by the end of April, going into May. Selling May and go away. You got there right. If we get to 54.84, a lot of people go sell in May and go away. Once again, look how the narrative lines up. You're going to have people crazy bullish in April. I mean, crazy bullish, right? We made it through the correction period. without a correction, supposedly. And now we're going into the most bullish month, and we're going to get to 5,400. Can you imagine if we get to 5,500 by the end of April? People are going to lose their effing mind. Once again, I'm going to give myself a pat on the back because I called that. That was one of my numbers. I said, yo, I think we can run to 5,500 before people was talking about it. And I got to give Cuzzo shout out too, because he was like, he tweeted like, yo, the way the market running, we could get to 5,500 by April or May. And bruh, it's damn sure looking like it. It is damn sure looking like it. And at that point, you know what I'm saying? If we do, it goes back to, again, my last episode. I said this. I said, you know, we have a bullish February that typically leads to a 20% year. My new end of the year target was 5,700. So us going to 5,484 or, you know, these numbers by summer, it makes 100 absolute sense. Because what will happen is, and we'll get into this when it happens, but I think maybe over the summer we might slow down, cool off, consolidate, that kind of thing. Like this summer, let me not give you what I think. Let me give you the data. Okay? This summer could after we get past May, it could be a little tricky. Why? A couple of reasons. Number one, we know that June primaries kick off, and we might get some uncertainties around the election. Gonna get a little nervous, right? Not only that, we know that rate cuts that first rate cut is typically not a bullish event. And if that rate cut is out of here, so big risks. Mind you, y'all can see I wrote this on December 16th. Big risk coming to the middle year. We don't got a slowing economy. I will say that. I got that part wrong. However, we could get the first rate cut in May or June. If we get that rate cut in June with June primaries after the market has run 15%, do you not think people will sell in May and go away? So we could get a little bit of consolidation. We could get a little bit of a pullback. Absolutely, right? It would make sense. I just want to put that out there, okay? And so with that being said, you know, last and not least, Twitter sentiment is in a state of disbelief. Right? Like I've been looking at Twitter, man, and people are in disbelief. You know, they disbelief. They're in disbelief. So, you know, it is what it is. Overall, I have been bullish all year. I've remained that way. You know, I have even taken off my hedges because we've navigated seasonal weakness, right? We survived with just a time correction from an index perspective, and we're going into the most bullish month of all. And I love this question because I'm about to address this. So everybody's going to ask me, well, what if we get a bearish April? Listen, man, it's human nature for you to try and fight this. It's going to be human nature for you to be a contrarian. But I'm going to tell you, it may not be in your best interest. Do not fight this data. Do not fight this data. When have we had a crash in an election year? Never. Okay? I get it. It's the fear in your mind. Get past it. Okay, if we have a bearish April, pivot. Simple. Pivot. Get you some puts. It ain't that hard, right? It don't got to be that complicated. But I'm just telling you, I wouldn't be it. I'm trying to goddamn tell you. Until we see some bearish fundamentals, some bearish macro news, try it yourself and see what happens. So for this week, man, like I said, I'm looking for maybe a little bit more rotation. Ultimately, we could finish this week at 5,300. And yeah, I got my sights on 5,484, 5,500 by the end of April, going into May. And I don't see what's stopping us. I don't see what's stopping us. You know what I'm saying? I'll say it that way. I don't see what's stopping us. And with that being said, I'm gonna come into these questions. Hopefully you enjoyed this episode. We back, baby. We back. You know what I'm saying? I know it's a little 2-week hiatus, man. But again, you know, if you go watch the last episode, man, that's all you needed. I didn't need to put out any more content for the next 2 weeks. Plus, I didn't even really feel like I had anything to talk about because nothing I was going to say was going to change. I was just going to keep saying the same old thing. Listen, we just need to hold the line and get past FOMC. We just need to get past quiet wishing. We passed all that. Now I got something to say. And I didn't change my stance. So, you know, now I'm ready, baby. With that being said, let me get some of these questions. Miss Wilson, I think there might be I'm not sure. I'll just say Khalil, if I said that right. Wilson, what's your take on Apple? I think I already did Apple, so we cover Apple. I showed Apple. Miss Baylor said, good evening, Zay. I missed your episodes the last 2 weeks. I appreciate you, Miss Baylor. It was a few people. Shout out to my dog Kareem. Shout out to it was like a few people who had hit me up and was just like, not even about hitting me up. They just hit me up to be like, yo, are you good? That I appreciate that. You know what I'm saying? And it's like, yeah, I'm good. I'm just, you know, I'm taking a break. You know, so that shows me not only do they appreciate the information I give, but it ain't even, you know, they just use me. They like trying to make sure the dude is good. You know what I'm saying? So I appreciate that. You know what I mean? But you know, sometimes you gotta take a mental break. You know, the market can be rough. Umar said, what's your take on the Russia attack? Won't it affect oil price? I don't see it affecting oil right now because if I go look at the futures market, oil's, you know, it's still right here. You know, could it have an impact on oil? Absolutely. You know, that could be one of the catalysts that they try to use, right? You know, here's my thing. Headlines like this and news like this, they are just catalysts to try to move price to where they want it to go. I never am too worried about that stuff because within a week or two, it's in the rearview mirror and people just ain't talking about it no more. So, you know, while it was crazy, I don't, you know, low impact. That's the best way for me to low impact. My boy Will, what's good, my guy? He said Disney is finally hitting again. Man, I haven't looked at Disney in a minute. Let me take a look at Disney. Okay, Disney making it's out. Damn, that thing got 115. Nice little run there. Okay. Got right back into this consolidation that I've been looking for. Nice little bottom. Okay, Disney. Man, only thing about Disney, and what's crazy is Disney's running while they having that proxy fight. So it just goes to show, yeah, they got bad news, but just stop running. Will said protection put super high because so many investors have made money the last 12 months and the people are getting a little smarter after 2022. Absolutely. Google on its way past the moon. Market ran without Apple and Google. They sure enough going to run with them two out of correction. King Rail, my dog Rail. Listen, Rail hit it on the head. I didn't even bring that point up. Do people ain't even taking note that we are at all-time highs and yet Apple and Google haven't really participated. What do people really think is going to happen when, well, I can't say the number one stock because Microsoft has taken that over, but what people going to do when Apple pick it up? Great point, Rail. My boy Dre said, hell yeah, bro. You've been on it since the yields narrative. Exactly. And that was what, August? Oh, man. July? August? I think that was. Something like that. My boy Quadri said, put some respect on my name. Do you see AMD recovering by next earnings? Let's go take a look at AMD. I'm going to answer your question. I do. I do. Now, from a week. Okay, there's a couple things, right? Let's talk about AMD because AMD just got that news that dropped over the weekend that China is now banning Intel and AMD chips in government computers. So once again, let's break down the headline for the fearmongers. Number one is China makes up 22% of AMD sales and 20% of Intel. Now, you got to break down that 22 and 20% because the ban is specific to government, not consumer. So that 22% of revenue that could be impacted is actually smaller. So when you see a headline like that, you got to ask yourself, what is the impact to AMD and Intel's bottom line? It may be low impact. And if so, if we get a negative reaction to this news, that could just be a buying up. Once again, what did I say earlier? The market works on fear. Why? Because it's the strongest human emotion and it's the easiest to manipulate. They will want to manipulate the price down based on this fear mongering headline, only to do what? Drive it back up when earnings come through and we see that they crush it and we see that the fundamentals are good because of why? I said it earlier. Fundamentals is driving this market. AMD fundamentals are freaking solid. It's making a lot of freaking money. It's a great freaking business. I love this shit. So do I see AMD recovering? Absolutely. You know, and if I go look at what's happening, right, maybe we can have a little bit more downside based on this fear-mongering news because it does have some gaps. But if that don't happen, that means that's a buying opportunity and AMD is probably going to start its recovery. So absolutely great question. Shanique, thank you so much for the super chat. I appreciate the love. And my boy Will, shout out to you for the super chat, man. Been watching for a minute. Appreciate you, man. Showing love in the super chat. I love it. I love it. I love it. Legendary notes, people going in. DJ, we already talked about the bearish April, so we good there. Let's see. Taylor, we're a lot more energy independent now. Outside influence won't affect oil market. Great point, Taylor. You're absolutely right in that. Guess who is not one of the number one oil producers outside of OPEC? The United States. So he is absolutely right in that as a country, U.S. is a lot more energy independent now. The fact that we produce so much energy is the reason why you get in OPEC doing all these supply cuts, because they're trying to manipulate and manage the price of oil, right? So Taylor, great point. Appreciate you for tapping in. I think I haven't seen that name before. So, you know, if you're new to the show, I appreciate you. And then King, and yes, April kickoff earnings. Yep, April. I think that's going to start soon. Not this week, not the next week, but the week after that, and we kick off with the banks. And the bank's been popping, right? So just note. Oh, thank you guys. So once again, I give y'all one last gem before we bounce. One last one. So talking about banks, knowing that we're about to go into earnings season in about 2 weeks for the banks. There's a name that just broke out from a 60 some odd day consolidation. And oh, baby, I think she's going to do some work. And if y'all know me and been rocking me for a long time, y'all know Goldman Sachs is bae. Goldman Sachs is bae, right? So with that being said, Goldman Sachs has consolidated. Look at that sideways action. Look at that sideways action. And look at this breakout, okay? It broke out, pull back. It might pull back into this little gap, but just know that this is about to get wild. And just know, earnings is April 16th. And just know, when Bay get going, Bay get going. So let me show you on the weekly because it makes it even look even better. So look at all these, look at this weekly bullish consolidation, breakout, even getting past old highs, right? I'm going to take it to a monthly, looks even better, right? 2 dojis. This is March, right? We made it through. We made it through and we breaking out and we about to go into April and I'm going to finish it here. The most bullish month of the year. What y'all don't hear, man? And we're probably going to go for 420, if not higher, on Goldman Sachs. So listen, man, I hope you guys enjoyed this episode. I had a lot of fun being back. Hopefully I shared a lot of great value. My guy, what's that? Babatunde, appreciate you, Zay. Appreciate you. Lola Sunshine said, all right, I'm getting my SPY and Apple calls together. Dre say, let's go. My guy, Richard, another super chat. Y'all going crazy. Appreciate you, my guy. Appreciate you. Manifested, that's another runner. family. She appreciate you. You know what I'm saying? My guy. And Russell Richardson, Gems, I appreciate you. Those say you did, and thank you. Once again, those are all the comments I see right now. Hopefully I answered your questions. Yeah, listen. I noticed the last week. So hopefully everybody can end, have a great quarter. I actually had a pretty rough quarter. Even though my nostrils were spot on, my execution could have been a little bit better, but it's all good because I am, and shout out to my boy Andrew, I am well positioned for quarter two. And I am well positioned for what's about to go down in April. So with that being said, good people, I hope you guys have a great Sunday. I hope you all have a great week. I'll catch y'all next week, same time, 7:30, for another episode of Sativa Sunday. So until then, y'all stay blessed. Peace out.